Hello and welcome to our highlights of this budget. That's Vasu, who's become an absolute expert. He's interviewed some of the finest minds in economists in the world. And Dorab, who's always been a complete expert. We will hear voices, at least I will hear them, the other two may not actually listen, voices of industry, agriculture, economists. Now, while there's no doubt that this budget has one focus that everyone welcomes, it focuses on building infrastructure. You may say that's a no-brainer, but man, a lot of budgets in the past have missed out on no-brainers. Infrastructure is what our country needs in order to get out of this very poor economic state. And the economy is in really worrying situation. Not just because of the pandemic. That's really important to understand. I mean, just look at these charts. They're extracted from an academic paper written by the former Chief Economic Advisor, Arvind Subramaniam, who's at Harvard and now at Ashoka University. Now just look at this data. Exports, there's been a sudden collapse. And this is not just a political point. It collapsed, it went down in UPA2 and it's gone plummeting down in the BJP, current BJP, and this does not include the pandemic. So 24-3, next graphic, that is a crisis of exports, and exports have helped us tremendously in the past. Imports, huge drop. That means our economy is not, demanding and not growing, and therefore not demanding stuff from outside. Look at that, from 31%, in UPA2 it fell to half. That was a trend, and that trend has just continued. It's 4% now. Move on. I just want to show you pre-pandemic all this is, how bad our economy is. Industry and government infrastructural investment plummeted from 13% to 2%, a little bit more, 3% now. That is worrying. Moving on, if you look at private investment, look at that plummeting, 25.3 down to 2%. Well, this is industrial, in private and public industrial, but 2% and 3%, my God, it's crisis. Corporate profits from 2.7% of GDP, now half that, 1.4, and that's before the pandemic. Please understand, this is not a political point. This started in UPA2, and they're all equally to blame. And look at the sales, from 17% growth down to 3%. That is just huge drop. So this is all pre-pandemic. And credit and bank loans to the economy, again, for 20% to 6 and 4. And look at the difference between UPA1 and UPA2, how UPA2 the economy started crashing and it got even worse under the current government. This is really, really a serious issue. So while the focus is on infrastructure, and that's a major, major positive in this budget, the one big worry in this, will the implementation and execution of these plans be any better than in the recent past? We've seen huge promises of disinvestment, privatization, huge growth. But in reality, we've seen very, very poor execution on the ground on almost everything. I would say on roads is one area, and highways, where we've really learnt and moved ahead a lot. But say privatization, last year, 1/6 of budget targets. That's really, really a catastrophe. So bad implementation is the biggest fear for the Indian economy right now. In fact, if you look at the government economic survey, it has data in a table which shows you the crisis of implementation and where all the problems are. Just have a look at this. We are just drowning in over-regulation. Our overall rank in the last 5 years, 69 to 74th. That's not that different, because the number of countries are up a bit. The quality of regulation, down from 87 to 104th in the world. Poor quality regulation. Improper influence use, all kinds of means are used now. We used to be 74, which was pretty bad. We're 107th now. The timeliness, are things done on time? Getting worse. Due process respected, that is a positive, and it's highlighted in the budget. I'm not sure it's such a good thing if due process means all these other sort of bureaucratic interventions. 72nd to 45th, that's good. But let's look at something which we all can understand in reality. To start a business, how difficult is it? In India, we are 130th in the world. How difficult is it just to register a property? 154th, it's so difficult that we are so bad. I mean, with all this sort of stuff, over-regulation, you know, this is what worries. These are worrying conditions for implementation and growth. So the bottom line, Vasu and Dorab, in my opinion, is this is a budget with the right focus, infrastructure, but it leaves no clear indication or path of how that infrastructure will happen, how will it be implemented.
Not just that, Prannoy.
Sorry, last point.
Yes, go ahead.
A great focus, but does it have credibility? Sorry.
Yes. No, I just actually want to pick up on that credibility point, because quite apart from implementation, you're right to say that the focus has been on infrastructure, on spending more on roads, ports, metros, power, all of that. But again, the numbers, Prannoy, one has to really look at it beyond the hype, because at the end of the day, we've been looking at the numbers. The additional capital expenditure, which is what the government actually spends on roads, ports and all of that, is only up 1 lakh crore, which is not a lot for a country the size of India, and the fact that you're trying to dig yourself out of a pandemic, that is not a very big number. Revenue expenditure, which is what you spend on salaries and all of that, that is still 3 lakh crore. So totally the government has budgeted an extra spending of 4 lakh crore in this particular coming financial year.
Out of that, 3 lakhs is revenue. Wow.
Yes, that's right. So only 1/4 is for capex, capital expenditure. Revenue expenditure is 3 lakh crore. So beyond implementation, questions actually remain even on the claim that the government is, as the finance minister put it, I'm spending, but, you know, frankly, how much really are you spending? So there's that as well.
Yeah. And Dorab, you also had a point on the data. For once you've been studying and working hard.
You know, the corporate tax in the coming year, let's forget the fact that there was a COVID year, because we can't compare it. Yeah. But if you look at the tax increase in corporate tax, there's virtually no increase. Yet there is a 13 or 14% increase in personal income tax. Now, why is that happening? Normally they move together, because they've really, whatever money they want, they're either borrowing or getting it from customs and excise. I mean, there is a huge increase in customs and excise compared with the last normal year. It's just shot up by over 30%. So that is where the money is coming from, in addition to the hopes for disinvestment and the huge increase in borrowings, very large increase in borrowings. So we'll have to pay the interest on that. On the subject of infrastructure, you know, the private sector just hasn't got the money. You were talking earlier of sales down. See, if sales are down, profits are down. Sales are down, I have excess capacity, so why should I invest? If sales are down, you know, bank loans are down. I don't need to invest, so why do I want bank loans? I mean, you know, people say, why don't you invest? You know, if I've got excess capacity, even if you give me at 1%, what will I do with building a factory? You know, I think finally demand has to be revived.
Good point, yeah.
Yeah, you know, we are essentially a consumer-driven economy. And unless demand revives, you know, you can't get the cycle going. And that's what you need. And I think somebody was saying to Vasu or Vishnu earlier in the evening that, you know, we need more investment. Gross fixed capital formation has to be well over 30%. We've been going down 30, 29, 28. You can't get ahead. You know, at one stage we were investing nearly at the peak, of course, when all boats were high, 39, 40%.
Yeah.
I mean, China's regularly in the old years done that, 35%, 40%, 45%.
Yeah.
You have to invest.
And we're under 20
that
or
creates
20
jobs
now,
through investments.
Okay.
Consumer demand.
Prannoy, let me also just, let's bring in our panel. We've got a great panel. We've got TV Narendran, President Designate CII, who's CEO and MD of Tata Steel. Kiran Mazumdar Shaw of Biocon is here with us. We've got Naina Lal Kidwai, past President FICCI and also formerly of HSBC. Nilesh Shah, MD and CEO, Kotak Mutual Fund. He is a member of the Prime Minister's Economic Advisory Council. And Mukesh Bhutani, founder BMR Legal, leading tax expert. Let me just start with you, Kiran Shaw, because again, coming back to both the intent and the actual question of execution, but also of data, as we were just looking at the numbers, once again, if you look at the health numbers, we were all excited by the fact that the government is talking about almost 140% jump in health expenditure from 94,000 crores to about 2.2 lakh crores. Turns out, Kiran Shaw, that that's because they've clubbed a number of other heads along with health, like drinking water, sanitation and so on, which may be fine. That may be a holistic way of looking at health as a whole, but that doesn't necessarily constitute a big jump in the actual spending on health care capacity.
So let me start by saying that there have been two large additions to this year's healthcare budget. I agree that other aspects of health and sanitation have been combined, but the 35,000 one-time spend on COVID vaccination, as well as the 64,000 crores over the next 6 years on beefing up the primary to secondary care infrastructure is a welcome step. Having said that, I just hope that these are not going to be a one-time kind of investment in healthcare, but that continues to be a regular feature and a recurring feature, because once COVID is over, I think the same 35,000 crores can be spent on other vaccines, life-saving medicines, etc., etc. And then when you look at the infrastructure needs, I mean, you're talking about roughly 10,000 crores a year on the beefing up the infrastructure in public healthcare.
Yes.
But I think we need to do much more if we have to get to the 2.5% of GDP, which we want to do over the next 3 to 4 years. So I think this is a step in the right direction, but I just hope this is a recurring theme. I also believe
two things which you just said, I think are very important. One, it's a step in the right direction. It's not enough. 10,000 crores is like, in a country of our size and the dire need of healthcare, 10,000 crores should be 60,000 crores per year, not 60,000 crores over 6 years. And number two, will it happen? Do you have faith that it will actually be implemented on the ground? Just look at how poorly we are rated in kind of implementation of projects. Are you worried about that?
So Prannoy, I think that the 35,000 crores for the vaccines ought to be, we ought to be able to spend.
That will be fine. Yeah.
But when it comes to the healthcare infrastructure, I think 10,000 crores a year has to be spent. Otherwise, we are not going to see change. And because Ayushman Bharat has got off to a start with all these health and wellness centers and with the digital health mission, I just hope that this 10,000 crores will be spent. But
Okay.
it's not enough. Like you said, it has to go beyond. They're trying to develop all these critical care units. I think, hundreds of them. And this kind of funding is not adequate.
Right. Mr. Narendran of Tata Steel, again, that same question about, the idea that there is going to be much more spending by the government leading the way, private sector to follow. But again, as you're breaking down the numbers, the fact that your capex is only going up by 1 lakh crore, I understand government is constrained, but does that really match the hype that the government is doing some massive spending on infra?
I thought the finance minister said that there's a 35% increase in capex compared to last year.
Yes.
That's a number.
It is a 35% increase, but in the end, it comes down to a 1 lakh crore addition. So that's,
I agree,
that's
but
the number. That's the
can
number.
get that 35%, we'll start with that. I think, the way the industry is looking at it is any incremental money coming in, flowing through the economy is helpful. I think industry has gone through a couple of bad years and we're looking at bouncing back after the pandemic. The last 3-4 months has been good and we hope that the momentum will continue. I know it's starting off against a low base, But as you said right at the beginning, the focus is there. The devil is in the detail and the execution. But I think at least the focus is a good place to start, because sometimes we don't even have that focus. So I think industry is optimistic simply because a lot of what CI has been asking the government has come through in the budget. Now we obviously need to see the money on the ground over the next few months.
Money on the ground.
Okay.
Yes, absolutely. Spot
Yeah.
on.
Nilesh Shah, also with us, member of the PMEAC. Mr. Shah, your thoughts on that there is going to be more spending, but the question is it enough? Again, also in terms of where the money is coming from. As Prannoy was pointing out, look at the disinvestment target or the privatization target of last year. 2 lakh crore was the target, revised down to just 32,000 crores. Again, this year you said I'm going to raise 1.75 lakh crores, but you could barely meet 15-16% of last year.
So last year was impacted by COVID-19. Hopefully next year with vaccination in place, we will be in a better position to carry out divestment program. The divestment number of 1,75,000 crore is actually far conservative if we are able to achieve all the divestments which was proposed in the budget.
Nilesh,
Okay.
this is Prannoy. Thank you very, very much for joining us, and you join us regularly, and it's great to have you. I do want to question you on that. It was COVID year. Do you know how much the stock market went up last year? We haven't disinvested earlier or privatized earlier because stock market was low, conditions are not right. Last year it boomed. It was the year to privatize. And you don't need to be feet on the ground to privatize. It can all be done with Zoom, or as Vasu calls it, Joom. You can do it easily. How can you say COVID year stopped privatization? That is not acceptable, right? On second thoughts?
See, we have been pursuing the path of market divestment, and that has actually resulted into derating of PSUs. The whole PSU basket trades below book. Maybe today's rally would have bring them nearer to the book, but it is still at a substantial discount to the market price. Now we are moving to the path of strategic divestment, which has nothing to do with the market. The companies are being offered on a public-private partnership. The companies are being offered to strategic players. The best example of strategic divestment is Hindustan Zinc, which was divested for 769 crore, if I remember correctly, in 2003 for 45% stake on a public-private partnership. Today, the dividend income of Hindustan Zinc on the 30% stake of government is more than 769 crore. So, yes, 1 or 2 years delay on strategic divestment to realize better price is appropriate rather than going through market divestment at any prices.
Okay.
Fair enough. But there's also, very nicely put, and I accept that. But I just want to ask you that, I'm a Sardar at heart. Chak de, do something, get it done, and aage chalo, Otherwise we'll say, wait for the better price, wait for the better price. I mean, it's not just money, it's about making your country more efficient as well. And look at Air India. How many years? Not privatized. So I just worry, and I'm not just saying this government, previous government was as bad, if not worse, not being a political point. It's just not being able to do things and go ahead and move on to something new. I'm worried about Air India again. Will it happen? Waiting for a better price.
So undoubtedly, Air India is a classical example of how we have managed PSUs. It's probably the only airline in the world where number of employees per plane are more than number of passengers per plane. Now, that won't be easily possible to divest in that fashion. But if we structure it well, do you know that in 2020, the largest buyer of aeroplane in the world was an Indian airline company? We will be the fastest growing aviation market in the world. And Indigo, which is a private airline company, is now the largest airline outside of US and China. So if I can position Air India for capturing the growth of Indian aviation market, there will be buyer. But I have to remove the baggage of debt. I have to remove the baggage of probably excess employees.
Okay. Right. Well, let's see if it does happen. But Naina Lal Kidwai, how about turning the wheel and looking at corporate India? Because there's one thing to say the government should do more, but are corporates doing enough? Prannoy read out a graphic where he talked about how corporate investment has been steadily falling, and the government could turn around and say, look, we've lowered corporate tax to historic depths. We've pumped in so much liquidity into the banking system to make loans easier, cheaper. But corporates are still not investing. They're turning profits, but they're doing that by either laying off people or through salary cuts.
Well, corporates are in the business of making money. And if the demand isn't there, the investment is not going to follow, right? So what we've got right now is the need to get companies uniformly up in terms of revenues. And the good news is there are companies now that are limping towards pre-COVID levels. Most of them are in sectors which don't require heavy investment as yet. It's been the FMCG sector. The pharma sector is probably even, in many cases above the pre-COVID levels. The sectors the heavy industry sectors are only now beginning to pick up. Steel, cement, we are seeing the benefit of some of the investment demand coming through and therefore investment following in these sectors. And I think therefore the investment will follow. But we will not see the private sector put investment in until there is need for that investment. And that can only happen when capacity utilizations rise. The fact that many have used the COVID period to cut costs, and it's not just people. Fortunately, in many cases, they have kept people on, but maybe, they try to look at it in terms of setting salaries and wages lower, and those jobs will come back, I'm sure. The issue really is going to be around keeping this performance up in a sustained way, and infrastructure will help it. The construction sector will help some of these heavy investment sectors.
Can we just have those graphs on the left-hand side? Just if you play them, just to remind that this is not just a pandemic problem. We were on a downward trend for 10 years and a very worrying trend. And to get out of that, I don't know. We've heard that we're very satisfied there are no surprises in this budget, but man, we needed surprises. We needed something big. We're in a terrible crisis. And, that is a factor, industrial investment plummeting, and I won't go through all that again.
But
it is an underlying problem, right, Naina?
It is an underlying problem. And I think, when you have your hands tied like this, as I do believe the government has, what can they do other than stick money into infrastructure, which does not have an immediate impact. It's more going to, a medium-term impact in terms of jobs and pulling investment along. But I do think simultaneously, the money that is going into programs like the Jal Jeevan Mission and Swachh Bharat, and there the government seems to have done quite well historically in terms of implementation. That machinery is still pumping away. That money leads to job creation, and job creation in turn will hopefully lead to more spending as well. So the public services space is an interesting one as I see it. And there the numbers do stack up in that there is an increase over the year in, say, I was just looking at the numbers, for example, for Namami Ganga is up. The river basin management is up 34%. The big one there, for
all
the
that's
whole
fine,
ministry,
Naina Lal, all that's fine. But people globally look at these macro figures, and our rating is BBB-, and we are complaining nobody understands us. But that's not what the reality is. People don't trust our figures, so they look at these disaggregated figures and say, look, maybe your GDP, we don't trust it. So we have a lot of work to do. We need to understand things are not just marketing, and that is all good. We have to look at reality. And it is a very, very serious position. Vasu.
But just on that, Mr. Narendran, to try and understand, because again, I'm not the economist in the room, I'm kind of, it's an overnight expertise, but about the cycle of how you break it, because on one hand, as Nainalal Kidwai says,
Vasu,
yes.
Vasu, I just want to say, modesty is the facade with which mediocrity impersonates genuine excellence. Carry on.
I was hoping you wouldn't say that on air. I know you said it to me many times privately. I don't know if you're going to broadcast it. But the fact is that, as Nainalal Kidwai says, corporates are in the business of making money. If there is not enough demand, they will not then invest, they will not expand. But then how do you create that demand? There was one expectation that the government would directly put money into the hands of people, boost consumer spending. That hasn't really happened. So then how do you break that cycle?
So traditionally, if you see, India has been more consumption-led growth, unlike China and many other developing countries who've been more investment-led growth.
Yes.
So the focus on infrastructure and increasing expenditure on infrastructure, I think, is a step in the right direction from that point of view. Because consumption-led growth can only take you that far, and unless the infrastructure is created, investments are made, you're not going to create jobs. And we've had services-led growth where I think a lot of the jobs happen in urban centers and not so far away from the urban centers. So to me, in many ways, the economy needs to get rebalanced. And if you really look at the story of the last 10, 12 years, after the global financial crisis, and of course, all the challenges that was there pre-crisis when there was a commodity boom across the world and even in India, things slowed down, and that was evident in the graphs that you showed. So, and in 2015, China slowed down, and again, that had an impact, globally. So to me, we've had a few tough years, both internally and globally. And, just when things were starting to pick up just before the pandemic hit us. So I think in many ways, it was pretty much a perfect storm. And, I think we're digging ourselves out of a hole. And, the investments will come back in the private sector when there's demand and profitability. Demand growth should come, and obviously profitability should improve so that balance sheets are not so leveraged. And as Nainalal said, a lot of the investments over the last 10, 15 years has been in power, steel, etc., capital intensive, but a lot of the NPAs were also in those sectors, right? Because these are cyclical businesses. In a down cycle, a few people will go bust. So we need to make sure that we have a healthier sector in capital intensive sectors. We don't overspend while at the same time have sustainable growth, investment-led growth. So there are many things which need to come together. Government is obviously trying to do what they can. Private sector needs to obviously step up investments. But I think I personally am optimistic about that.
Okay. All right. Prannoy, Mukesh Bhutani is also with us of BMR Legal. Mukesh Bhutani, now on taxes, this has been a largely quiescent budget, would you say? That's because, why? Because the government had already done enough on corporate tax and on personal tax. So that's why. But then again, the question is, if you're not playing around with taxes, then how do you address, where do you get the revenue from?
Well, two things. One, as you correctly pointed out, we don't have any shocks in this year's budget insofar as additional taxes are concerned. But I think there are two important messages that are coming. One is that the government is taking forward its 2019 and 2020 budget to reduce tax litigation. In 2019, we had a settlement scheme for service tax and excise duty. And in 2020 budget, we had with the Vivad Se Vishwas scheme, which was for income tax. Now, taking forward, there are two important administrative steps that they have taken. One, setting up of a dispute resolution mechanism for small and medium taxpayers who have income below 50 lakhs. I would have ideally liked that they had extended to all taxpayers. I don't see the reason, except for the fact that the government may be piloting this project. The second is that the otherwise non-functional, redundant advance ruling authority has been completely revamped. I also think that the tax projections of 16.7% on the revised estimates are reasonable. And I deem it as reasonable for two reasons. Number one, we've already seen the uptake on GST collections in the last 4 months, with the month of January recording highest 1,20,000 crores. The second is that the corporate profitability has been unusually high. Now that has been high just because people have been able to manage the cost very well. But if you look at the declaration of results even for the third quarter for the current financial year.
Sorry to interrupt. Can you just answer Dorab's point that they're showing corporate tax revenues up from not the pandemic year, from the year before, by 0%, and personal tax up by how much, Dorab?
Since the previous year, forget the COVID year.
Yeah,
so
yeah.
I feel because of the fact that there is too much customs and excise, and profits are being hit by the very severe increase in customs and excise.
Customs and excise up by 39%?
Yeah.
Correct.
And
So
corporate tax up by 0%.
Correct. So on customs and excise, there is an implicit assumption. We already have a low base for 2021 because there were virtually no imports in the first quarter when the economy was shut down. Even today,
No,
the imports
about the previous
are
year, previous year,
Yes.
not the pandemic year.
Well, the previous year, which is, if you're talking about March 20, that was the slowdown impact because there was a steep fall in the customs duty. We were settling down on the GST law, and the collections were not very looking very healthy, at least on a month-on-month basis in terms of consistency. In the current financial year, we've seen a steep drop in imports, which means that the custom duty collection has been low. So on the back of imports picking up, even on a base of fiscal year 19-20, the custom duty collection projections have been high. Second, there is a agricultural cess levy in lieu of the basic custom duty on specified 35 specified products, including from tonight on the petrol and the diesel. And the proceeds of this cess will not devolve on the state, but instead on the central government. So a combination of uptake in personal tax filings. The personal tax filings have gone up, doubled from 3.13 crores to over 6 crores. And that's the easiest way for the administration to collect taxes. On the back of 11% growth rate, you are expected to generate decent corporate profitability next year. And then the trend that we have seen in the GST collections in the last 4 months, all of these factors put together give me the confidence that the overall gross collection target of 16.7% is reasonable for next year. I think the other important aspect noteworthy is the focus on non-tax revenues. Historically, the non-tax revenues were largely because of divestment proceeds. This year, we have a fairly material item on monetization of assets, including the land parcels.
Okay,
one will
that's
need
also
to
another.
see.
Yeah,
So
that's
one will
another
need to
important
see how
source.
that pans out.
Okay.
Correct.
Prannoy, as a prominent farmer, what is there for agriculture in the budget? Since you're a
Vasu, I'm shocked
well-known
at you.
Kisan.
Excuse me, I have to give my credit. I have to, you're the main person I have to convince. Baki, the rest of the country forget. They, trust. You are the one. I did my PhD in agricultural economics under Raj Krishna and Amit Bhaduri.
Wow.
Not bad.
Not bad at all.
I've been on the farms for that PhD. I've been on the Punjab farms. I've been on the first combine harvester ever. I've sat in dhabas at night where you have a little cup of tea, something that looks like tea without milk. And there you sit on the table. You don't sit on the stools.
Right.
Everybody sits on the tables. And that's where you learn about. And if you are, so that's credibility established?
No, not
as far as
not
agriculture
just, yes,
is
sorry, go ahead, yes.
So as far as agriculture is concerned, I think something that Kaushik Basu, another former chief economic advisor, some data he put up, is just that we think, we are subsidizing our farmers, we're spoiling them. You just look at the graphic that Kaushik Basu put up. And here it is, the government subsidy to agriculture, this is 2019. Look at the where we are. India 11 billion. Indonesia, a poor, not a developed country, 29 billion compared to India 11, and they're 1/5 our size. And China 185 billion. Forget comparing with developed countries. We are just really under subsidizing our agriculture. Number one. The big issue at the moment is we have the food stocks. We have too much wheat. We are growing too much wheat. We're not growing enough other stuff. Now, how do you change that? As an agricultural economist, I would say strengthen your MSP system. Give a minimum support price to other crops that make them as profitable as wheat. Then people will shift. To remove MSP and try and make a free market and don't subsidize more is not an agricultural economist approach to, and I think the budget doesn't do that. We should strengthen MSP, remove all these laws, and actually raise minimum support prices of other crops that we are often short of pulses, we are often short of tomatoes, vegetables, onions. Raise that. Farmers react to where the money is, like anybody else.
In fact,
so we've gone completely the opposite direction to what we should have, and there's no change in that in the budget.
No, you're right. It's not just wheat, in fact, it's both wheat and rice, right? Because both of these are crops which the government procures.
Yes.
And
yes,
so you do have overcropping of these two crops. I will say this though,
right.
The government has started to procure pulses as well in a greater metric than earlier. The allotment for pulse procurement has increased. Is it enough? No, it's not. They can procure much more. There is also, Prannoy, a price intervention fund which is supposed to allow the government to step in and procure a whole range of other crops and cereals and even vegetables if the prices are falling. Let me finish. The amount allotted to that fund
These are just not
is very
working.
small. I'm
Just look
agreeing.
at cropping pattern.
No,
Anyway.
I'm saying that. I'm saying the amount allotted for this intervention fund is very, very small. It's simply not enough. So it goes back to your
so
point.
it's irrelevant. Look, don't move away from the main focus.
Yes.
Increase MSP, do not get rid of it. Increase MSP of other crops.
Yes.
And increase subsidy to your farm sector.
Okay.
Keep it simple, otherwise we'll be in
fair enough.
all over the place.
In fact,
I don't know if Nilesh agrees.
No, in fact, I wanted to ask Nilesh Shah that Nilesh Shah, the government actually spent quite a lot of time, Finance Minister, talking about how much has been spent on wheat and rice procurement. This is obviously with an eye towards the farmers' protest. But again, if you look at the numbers, there's actually been a drop in spending in agriculture. It's fallen, not much, but it has fallen from 1.5 lakh crores in 2020-21. 21-22 has fallen to 1.48 lakh crores. These are budget estimates, not revised estimates. Net spending has actually fallen. And it's also, by the way, fallen for PM Kisan, the flagship program where you get 6,000 rupees a year. Spending on PM Kisan has dropped by 13%, 13%, Nilesh Shah.
So in the accounting, there is single entry accounting and double entry accounting. Unfortunately, many a times people use single entry. For example, agriculture subsidy at $11 billion. Now, what about Food Corporation of India subsidy, which government has now accounted in the budget? That number is more than 3 lakh crore. What about fertilizer subsidy? That runs at more than 70,000 crore. What about agriculture power subsidy? Any sane person, if he adds food, fertilizer and power subsidy, he will arrive at a number which is far more than $11 billion. So we need to take number in a context. We should not follow single entry accounting system where you want to only present data from one prism. Now coming to agriculture, I am a Gujju Bhai, I am not a Sardar. But to me, what we have done on pharma sector, we should do it on agriculture. One of the reasons why Indian agriculture exports are at $38 billion is because we have never followed consistent export policy. Now food is as precious as medicine. Today we take proud in saying that we are pharmacists to the world. We are producing vaccine for our people and we are supplying into other countries also. Why can't we do that in agriculture? When sugar prices go up in local market, we cancel all the export contracts. When cotton prices go up in local market, we cancel all the export contracts. Now, this kind of inconsistencies does not allow us to become powerhouse in exports. A country like Netherlands exports $80 billion of agriculture produce, which is probably a state of the size of Haryana. India, with the world's largest arable land, exports $38 billion. We need to be consistent player in exports. Like we developed pharma industry, we should develop agriculture industry.
Okay. I had a
I think
yes, Prannoy, go.
Nilesh, I think as a Gujju bhai, you spoke very well on agriculture. I agree with a lot of what you said, but I don't agree that the figures are wrong in the sense that they show the trend, and we are under subsidizing our farmers, and we keep complaining we are giving them so much. And I do feel you need to address the issue of strengthening MSP of other crops, and not going with these laws that get rid of MSP virtually, and there's a lot of competition. Just that aspect, do you feel we should strengthen MSP of many other crops? Maize, sugarcane. Well, the sugarcane, by the way, when I was an economic advisor in the ministry, I insisted they had a minimum support price. It wasn't easy to do that, but it's still not kept up. But there are many other crops where we should strengthen MSP, not weaken it. What do you feel?
Ideally, we should allow market forces to operate. But obviously, agriculture needs protection because it is impacted by vagaries of the nature. But at the end of the day, if Himachal apple sells for 25 paisa in Himachal and sells for 25 rupees in Mumbai, there is a way to minimize wastage. There is a way to improve storage facility and remove the intermediaries commission. If we can do that, then farmer will benefit and consumer will benefit.
Right.
Okay, Dorab.
I think we should move on from this, Vasu, because I think
Sorry.
I see Naina falling asleep.
No. But before that, I think Dorab has a question.
I'd love to come in.
Just one second.
The agriculture point.
Yes, just a second.
Dorab has a question.
Dorab, yes.
I have a question for Mr. Shah. Mr. Shah, the growth estimate in real terms is 11%, right? From last year, pandemic. Agriculture, which is 15% of GDP approximately, grew pretty well last year. It's not going to contribute very much to next year's growth. It's not going to shoot up like industrial services. So that 11% growth has to come from the other 85% of industry, which is almost 13% real growth. How feasible do you think it is, particularly in fact that industry, actually 50% of industry, Mr. Narendran doing very well, but the small scale, which accounts for around 50% of the output and 80% of employment doing quite badly. So how do we get to this 13% across industry and services when industry itself is crippled in terms of the small scale sector? How do we get to 13%?
So, Mr. Dorab, I will give you some data. The GST collections are showing record collection, and the e-way bill generation also are showing similar amount of growth. That means this recovery is broad-based. It is not driven by just one or two entities or one or two sector. Number two, despite this 11% growth, we will still be comparable to FY20 GDP number. That means we have lost 2 years of GDP growth because of this pandemic. Because the base is lower in FY21, FY22 growth of 11% in totality or 13% on industry and services looks reasonable.
Mr. Shah, 95% of GST comes from 5% of the companies, as you know. So it's not
but
that
the e-way bill generation does
GST.
not come from 5% of companies. E-way bill generation happens from 100% of companies.
Sorry?
So the e-way bill generation, which was up 16% in December and similar number in January, that doesn't come only from 5 companies. When
Yes.
Mr. Narendran or Kiran Mazumdar shows company cuts GST bill, they are big in size. They are not big in quantity. The number of e-way bills which are generated are by small and medium enterprises. The power consumption is at 189 gigawatt. It is the highest in our history. Now, power is not only consumed by bigger companies, it is probably consumed by smaller companies as well.
Sure.
60% of GDP is from the service sector, which neither consumes powers nor generates that many e-way bills. It's Mr. Narendra who generates those.
Can I just wanted to ask one more, switch the topic in honor of Naina Lal Kidwai. I wanted to ask all of you, what kind of stimulus works? The big worry that we have, and I feel there should have been more introspection in the economic survey and in the budget, the big worry is our GDP is dropping by 7.7% or 8% according to IMF, 7.7. The emerging markets are dropping by 2.4. We have more than 3 times higher drop than anybody else. Why did that happen? Now, I think Ruchir Sharma had some wonderful data. If we just look at his graph, I mean, this is what I call, looking in and understanding and why and how to change. India's fiscal stimulus was 2.2. Our monetary stimulus and credit stimulus were 13, well over 13.7. Now, we were much higher on monetary and credit, but half everybody, in fact, less than half on fiscal stimulus. 2.2 compared to developing economies, 4.7, but way above on credit and monetary. So, my question is, based on this Ruchir's data, this is the kind of analysis I think we need. Should we rely more on fiscal, and we made a mistake by relying on monetary and credit stimulus? Naina?
Well, on your show last year was actually bemoaning the fact that we were still sticking to fiscal numbers, which already looked unrealistic last year.
Right.
So I'm on the same page as you, Prannoy, that we would have benefited from having enhanced our spend earlier. But we are where we are, and I'm glad that this year the government has embraced the 9.5%. It's a courageous step, and equally done it at a time when there is hope. I think Nilesh's numbers hold up, that we will see revenues up, that the GST collections, the e-way bill collections are all demonstrating that we are on a bit of an upcycle, that we are able to improve our tax collection and bring that.
So, but credit stimulus, others on the panel, credit stimulus, does it not work? Is that something we should learn from last year? Going down 7.7 was a shock. Anybody would like to talk about?
We can ask Mr. Narendran.
Narendran?
If he
Mr. Narendran
wants to come in on that.
Yeah, so I think, obviously a lot of the shrinkage happened in the first quarter. And I think at that time, liquidity was very important because a lot of companies would have gone bust. Overnight your sales dropped. So you need to get paid for the invoices that you had generated. A lot of money was stuck with the government. A lot of money was stuck in the value chain. So I think it was important in those few months to get the liquidity going and, make sure that companies don't go bankrupt in those 3-4 months that we had a complete lockdown. And not everyone had the opportunity to export. The bigger companies could export, the smaller ones couldn't export because they
one
couldn't
of the things which Vasu was saying, if I can just interrupt you and question you on that, one of the things which Vasu was saying is put money in the hands of people. Forget your budget deficit, spend more. Now, in the first 3 months, when people were really suffering, and we saw those terrible scenes of migrant workers, the worst I've ever seen in my entire career as a reporter, journalist, that was the time to put money, not talk about fiscal stimulus. And our fiscal stimulus 2.2%. I mean, is there I'm just saying, let's learn from these things.
In fact,
we want to help people and grow. Sorry, Vasu, go ahead.
Prannoy, in fact, migrants, but also businesses, Mr. Narendran, we were talking about the fact that companies needed liquidity. I spent a considerable amount of time shooting with small businesses in and around the NCR.
Yes.
And their problem was, stop giving us loans. At this point, we don't want loans. Give us cash. Find a way of transmitting cash to us so that we can pay our employees' salaries for the period of the lockdown to stay afloat. Waive our electricity bill. Find ways, like England has done, for example, where directly money was put into the hands of small businesses just so that you
And
can
many
survive.
developing countries.
Yeah, and other European countries, taking us back into this
Developing.
Developing countries, taking us into this maze of lending doesn't help, because that just means more interest payments, and that didn't happen enough.
So one
Very
of the
good
things that
example
CI had
from the
taken up with the
ground.
government at that time is to release payments from the government, both at the center and the state level, to a lot of the small businesses, because that was not about loans, but making sure that they got paid for services and products that they supplied. And that was essentially to pay employees, because that was one way to get money to the employees. The other thing I think which happened by July or so, June or July, is spending on Manrega started increasing. And as the migrant workers went back, we saw a lot of activity in rural India because there were more projects being done there. I think that helped us in the July, August, September quarter. But yes, money needed to go to the people so that they could spend.
Yeah.
Okay. Well, we're just very, very short on time, just a few minutes on this wheel. So let's just get quick closing comments. Overall, though, Nainalal Kidwai, are you hopeful that the sort of caravan has been pushed in the right direction, or somewhat apprehensive?
Definitely hopeful that the caravan, as you put it, is in the right direction. Execution is key, and there are some very tough targets out there. The disinvestment one, I was, not a votary of the number last year, and I still worry. If we do capital market disinvestment and, prices set aside, we can maybe get there. But doing strategic disinvestments, I worked on them. I worked on Air India 20 years ago. These issues are enormous. And land, it's there, but very tough to get these deals done in this year. So a lot of what's out there is going to directionally help us enormously. But what do we do for this next 12 months? And that impact is much harder to gauge.
Let me ask Mukesh Bhutani. Again, I think one of the most brilliant minds in tax matters. But instead of, you've been very clear now on the micro side, but just looking at macro, we see fiscal makes a big difference. So, Mr. Bhutani, from your point of view, what would you like to have seen in this budget that we have learned from our mistakes of the past? Not just, going down 7.7 we must learn from that. What would you like to have seen, macro point of view?
Well, I think the key lies in successful implementation. So if we have revamped the dispute resolution mechanism, then I think the proof of pudding is in eating it. I think for me, more important is the 4.5% fiscal deficit target over a 5-year period. I think it is predicated on very healthy tax collection. I would, if I was supposed to extrapolate tax collections for the next 5 years, I think the government would be very aggressive, 15 to 18% overall tax collection, assuming that the economy is going to grow between 5 to 6% on an average in the next 5 years. And that's also a very optimistic estimate. To be able to achieve 15 to 18% growth in tax collection, you really need very robust and deep tax administrative reforms, which means that whatever announcements you are making, whether on dispute resolution or on taxpayer charter or on faceless assessment, you really need to see all of those reforms delivering on the promise, because without the administrative reforms, you would not be able to achieve the tax collection target of 15 to 18%, and hence it would be academic for you to say that you will be able to achieve the fiscal deficit of 4.5% by 25-26.
Okay.
Very good point.
Fair
Very
enough.
well said. Yes.
Yeah. So we'll just leave it there for the moment. We'll take a short break, but don't go away, because when we come back, we'll have an equally fantastic panel and we'll get into a little bit of the politics or the political economy behind the budget. That's in a moment from now. Welcome back. We are decoding the numbers of the big budget 2021. Prannoy and Dorab are of course with us, but also we welcome on the show Yamini Iyer, President of Centre for Policy Research, and Omkar Goswami, Economist, CERG Advisory Limited. Great to have all of you on. Yamini Iyer, let me just start with you, because again, as we were parsing the numbers, much has been made about how implementation could be the issue, but the focus and the kind of vision is quite solid about infrastructure. But even numbers wise, Yamini Iyer, I'm not quite sure, because if you look at it, capital expenditure is only going up by 1 lakh crore. Revenue expenditure is still 3 lakh crore of the total additional spending that the government has planned for the coming financial year. So with a 1 lakh crore increase in capex, can you really claim to have spent in a massive way, turned the economy around?
So sorry, the screen is frozen. So just wanted to say that before I make my remarks. So I'm a bit disconnected from.
Okay, but we can hear you fine. So go ahead.
You can, okay, great. No, so absolutely. I think a couple of things. The overall rise in expenditure for this fiscal is up from about 30.4 lakh crores in the budgeted estimates to 34.5 lakh crores in the revised estimates, is really, frankly, a fairly modest rise, and driven largely by food subsidies and NREGA expenditure, with a very small proportion of increased expenditure for health, which is somewhat surprising against the backdrop of the COVID-19 pandemic, and in fact, a fairly significant increase in activity related to health expenditures consequent to that. On capital expenditures, again, the increase is relatively modest, but let's also remember that the governance challenges facilitating and enabling capital expenditure are significant, and therefore perhaps this is a relatively more realistic expenditure. It's certainly not going to be enough to get us out of the current crisis that we are in. I think that states have been far better at spending on capital expenditure than the centre traditionally. There is a commitment to a minor increase in the grants in aid for capital outlays for states. That's a positive sign, but really the rubber will hit the road as far as state governments are concerned. And here I think the somewhat limited devolution to states, despite the very, very welcome commitment to 41% vertical devolution of the 15th Finance Commission, but at least for this year, the devolution to states has been remarkably low, and that's something that's going to affect our spending going forward.
Okay. All right. Also, Shekhar Gupta is with us as well. Prannoy, yes, go ahead, Prannoy.
And Omkar.
Yes.
Omkar and Shekhar, we are looking at, will privatization actually happen? Will implementation actually happen? Last time it was 1/6 of what the projected amount was, and we're looking at numbers. Is it also like the old socialist Congress? This government doesn't really believe from their heart in privatization, does not really believe in opening up the economy. I mean, that there's one chart which Arvind Subramaniam, former Chief Economic Advisor, and his team gave, and it really has had impact. Just have a look at this, that we are returning to protectionism, are we? 2017 and 2018, just look at the normally about 150 times you increase tariffs, but in 2017, 2018, we increased tariffs 2,460 times. And we're talking about, are we becoming more, 25 years ago socialist Congress, protectionism, don't privatize, don't really have too much faith in the private sector. So do we just not look at number? Is there some underlying issue here? Omkar.
Hi, Prannoy, thanks. Can you hear me?
You're very clear.
Okay, thank you. So let me start with your first question on privatization. In the last 3 years, if you take 3 years together, it has been miserable. We have only achieved 45% of the budgeted estimates. And last year, as you said yourself, out of a target of 210,000 crores, we achieved a piddly 15%. That doesn't deter us for asking for another 170,000 crores this year. I am now increasingly of the belief that this government talks about disinvestment, but simply can't do it. You know, there were 42 companies whose names were sent in the previous by the previous Niti Aayog chairman before Rajiv Kumar, Arvind Panagariya, to the Prime Minister, and it went to the to DIPAM, the Department of Private, whatever it is. Okay, they were public investment management, whatever it is. Nothing whatsoever was done. So I'm not at all convinced that this government is into disinvestment and privatization. It doesn't bother them that year on year that they get egg on their face. They may get a big ticket item and they will pass through, but it doesn't bother them. But I think there are some more worrisome things. Let me take you through one. I've got 5. Sorry, you want to go on to Shekhar,
yes,
or shall I continue?
Yeah, if you just do one for now, because we also have Dr. Amit Mitra, Finance Minister, West Bengal, has just joined us, so, and he's on the clock. But yeah, if you...
No, you can do what you want. You can do what you want.
Okay.
Shall I stop now?
Yeah, no, hang on. Omkar, will come back to you for sure. But let's just go across very quickly to Dr. Amit Mitra, because as I said, he's on a tight schedule. Thank you so much, Dr. Amit Mitra, for joining us. What is your take on the budget? The expectation was this is going to be a budget like none we've seen. It is going to give us the sort of required boost to come out of this pandemic hole. Has this budget managed to achieve that?
Of course not.
And,
first of all,
Dr. Mitra, just
this
to say, I just want to say
government-
one thing. Dr. Mitra,
Yes.
you are here as an economist, as an academic, as an intellectual, as a former head of FICCI, not as a politician. No politicians on the panel of FICCI, yeah. So you're here as a Bengali intellectual.
Okay.
With that caveat, with those caveats.
Yeah. I think, first of all, I think there is a fundamental problem with this government's approach to a long period. 7 quarters of decline in GDP before COVID came, because they didn't know macroeconomics. Now comes COVID. Repeatedly, I wrote to Honorable Union Finance Minister saying, please shift to demand stimulation. And this can be done by putting money into the hands of the people. And this is what all governments in the world are doing. They didn't do it. They are supply side people. You know, it's funny that when you're in a COVID situation, all other countries are doing this. We're putting money into the hands of the people, demand gets created, and then supply responds to the demand. Keynesian versus what is called the Say's law. Probably the Union Finance Minister doesn't know that what she's doing is part of the old classical Say's law, create supply. So first is a fundamental lack of understanding of macroeconomics. I also one day heard Dr. Subramaniam Swamy saying the same thing. And we don't agree on many things, but on this one we do agree. Now, let me go to the second point. This is also what I find is a anti-federalist budget. Now, Union Finance Minister herself said it is the states which are in the action mode on the ground for fighting COVID. Now, what happens? What is the outcome? West Bengal spends 4,000 crores on COVID. And how much did it receive from the center? 279 crores. This is a shame. 279 crores out of 4,000 spent. How much do we really need?
I just want to...
We need 11,387 crores. And we have written to the Union Finance Minister precisely.
Right.
But they won't give it.
And the same thing is happening on
now
GST.
You go to the second
I just wanted to ask you, just want to interrupt 1 second.
Please.
Because you make an important point and we shouldn't let it pass. The important point is of federalism, of center-state relationships, and we've seen more and more people identifying with their state and, for example, at elections, the turnout in state elections is 10% higher than for Lok Sabha elections. India is a federal state, and federalism requires a communication, compromise, discussion. For example, I think Arvind Subramaniam said this, and I want to just ask you about federalism, that when they introduced GST, it was in a great discussion with all parties, all states, and it came in. Okay, it not been it was made too complex in practice, but even with farmers, it's not a federalist reaching out. Is that what you're complaining about? That you want states to be recognized like they should, they deserve to be?
Yes, I think you're absolutely right. Dr. Subramaniam knows I was the chairman of the Empowered Committee of Finance Ministers when Mr. Jaitley was there. I pushed for GST on the ground that states will be compensated for 5 years. Now the whole process is going fine. Once Mrs. Sitharaman came as Union Finance Minister, instructed, of course, the Prime Minister's office involved, we went into a complete muddle on GST, where we're fighting in the GST Council. It should not happen like that. Let me go to the other part that Dr. Roy, you're asking.
Yes, please.
Devolution.
Yes.
You know, taxes are collected from the states. Center doesn't collect taxes. They are collected from the states where businesses make money. 41% of that is returned to the states, called devolution. Now, do you know that this year, they have not paid West Bengal, it must be similar with other states, 10,000 crores of devolution by December this year. Now, that is all budgeted in my budget for various people-related programs. How do I run it? Let me go to the third question of this question of what you've asked about federalism. You know, cesses go up every time under this government. Cesses and surcharge. You know what's interesting? Cess and surcharges do not give back to the states the 41%. This is a form of cheating, that you increase cesses and surcharges so that you don't have to share that money with the states. So I can give you ample examples. I sent you a letter of mine written to Honorable Union Finance Minister, one by one showing that there's an anti-federalist process in this government which is alienating us.
Just one question though. One question the Finance Minister said in a speech when she was talking about capital expenditure, she said over and above this, we'll also be providing 2 lakh crores to states and autonomous bodies for their capital expenditure. Is that?
This is all to be seen. To be honest with you, I think one of your panelists that I was listening, Dr. Ungar Goswami, said they promise and they don't deliver. Let me give you one simple example on this capital expenditure question. Now, the very key part of infrastructure is roads. Now, West Bengal has produced, according to Government of India confirmed, 88,841 kilometers, over 88,000 kilometers of rural roads. And it has produced 5,111 kilometers of state roads. What do we hear in this budget? We are going to come and give you 625 kilometers of roads. Why? Which states? West Bengal, Assam, and Tamil Nadu. Handpicked. All three are going into election. Now you come and say, I'll give you 625 kilometers, when already the state has done 5,111 kilometers and doing another 1,500 kilometers under construction. Very clearly you can see, Government of India recognizes the performance of West Bengal as #1 in roads, which is a key part of infrastructure of CAPEX. Now what happens? You come and say, I'll give you only 625 kilometers. What is the meaning of this? Therefore, what I am saying to you is, systematically, if the state finances weaken, the nation weakens. And here there's not a word on, for example, unorganized sector, which is in every state. It has collapsed first due to demonetization, then now with this lockdown, not a word. So where do we provide for them? Every single program. And let me conclude by saying, biggest problem is centrally sponsored schemes given by the Government of India simply have been cut off. and reorganized. So we don't get that money. And the share of states is systematically increased. So it was 60-40, now we have to pay 90% and they'll pay 10%. If you look at that, it is very dangerous, irrespective of who's in power. Indian democracy has to survive on federalist polity, part of our constitution. And I've given you examples after examples where that is not happening.
Thank you.
This budget is another example of that.
Ashok Mitra, thank you. That's very, very clearly
Amit
put.
Mitra,
And
thank
yes,
you.
it is worrying. Thank you. Sorry, Amit.
Thank you so much.
Thanks
Amit
very much
Mitra, who
indeed.
I've only known for 30 years. More.
Thank you very much indeed. Thank you. Thank
Let-
you.
Let's
As an intellectual academic.
right.
Thank you. Thank you. And a fighter.
Right.
Okay.
Thank you. Bye.
All Bengalis are fighters.
Okay, let's just go back to Omkar
Let's
Goswami.
go back to Omkar. Yeah.
Yes, sorry, Omkar Goswami, we had to sort of cut you off, but go ahead. Please go ahead.
Okay, I'm going to just focus on a few things which disturb me in this budget. But before saying that, let me say the three things that I felt good about. The first is a budget speech, the finance minister's budget speech finished in less than 2 hours, which was like 45 minutes less than it took last time, and she didn't even finish it. The second is that the budget speech, relatively speaking, compared to the last time, was more coherent. The last time was completely incoherent. And the third is, as far as the revised estimate for 2021 is concerned, there hasn't been too much fudging of the fiscal deficit numbers. To say that the fiscal deficit will be 9.5% of the GDP is more or less in line, perhaps even a tad higher than what many of us thought. So I don't think it's too much of fudging on that. Those are the three positives. I have a bunch of concerns. Let me focus on a few. The first is that the amount that the government is expecting as gross tax revenue, gross tax revenue, which then is given out part of it to the states, and the rest becomes the union government's net tax revenue. What it is expecting as gross tax revenue is over 16% over the last year, whereas GDP growth as assumed in the budget is 14.4%. In other words, the amount that you're expecting in gross tax revenue is quite a bit higher in percentage terms compared to GDP growth. And that has not happened, which basically means about something that economists call that the elasticity is greater than 1, and that hasn't happened in India for a long time, and so I don't expect that kind of gross tax revenue collection. So that's number one. Number two is what I talked about, disinvestment. I do not expect 170,000 unless they have some seriously big ticket items. We have failed time and time again, and they would do well to reduce that number by 25% in reality. Number three, and this again is quite important, is that even though we have talked so much about defense, you should look at the outlays on the defense budget, go by line item, and in fact, other than a 9% increase for the army on capital expenditure, there is no increase in the defense budget in the aggregate, both revenue and capital. And number four, and the last point that I want to focus on, is that I cannot understand how for the life of me has the pensions come down by the amount it has. It has actually. Both defense pensions have come down dramatically, and so too has non-defense central government pension bill. How has that happened? It's not been explained anywhere. Last but not the least, I cannot understand how there is a 40% reduction in the fertilizer subsidy. A reduction of that size should have been explained in the budget, and I don't see it anywhere. So there are all sorts of odds and ends that worry me in terms of the numbers.
Okay. All right, interesting points.
I hadn't noticed some of those.
Interesting points. We'll unpack all of those very quickly. Also welcoming on the show, we have Dr. Ilap Patnaik, professor at the NIPFP, National Institute of Public Finance and Policy. And also with us is Dr. Arvind Virmani is with us, of course. Great to have you, Dr. Virmani. He's been former Chief Economic Advisor at the government. Dr. Virmani, how would you respond to some of the points Omkar made, which broadly can be summarized as this kind of gap between the promises and the hype around the budget versus the actual reality of the past record of how all of this is implemented, especially when it has to do with privatization, disinvestment?
Or Virmani, maybe you can make 3 or 4 of your own points also.
Yes, of course. Dr. Virmani. Dr. Virmani, have you muted yourself?
Yeah, so let me start with the broader point where I have disagreements on some of the background which has been put out. So firstly, there is a fundamental change between the Modi 1 and Modi 2. And the first indicator of that was the September 2019 reform of the corporate income tax. Many of us have been arguing for corporate income tax reform for years and years. And I was still surprised to see the 15% for new investment in manufacturing. Why? Why has that been done and why that was good? It was because there is a huge opportunity to attract supply chains which are diversifying out of China, just to give one background. The second point, I think there is no doubt that in Modi 1, protectionism increased. That was the Make in India policy. But the IMF has given a precise estimate. There was the net increase from 2014 to 2019 is 1.3% average increase in tariffs. Okay. And the third point, I do not understand what is the connection between protectionism and privatization. Protectionism has to do with how you treat external trade and external, two-way trade. And privatization has to do with the public sector. They are quite unrelated, and I do not see any connection between the two. The privatization policy, the framework for privatization was approved only a few months ago. This is the first time ever that a proper framework for privatization has been laid out in this budget as a pursuant to what was said 2 months ago. I have been following this for 30 years.
Mr. Virmani, Arvind Virmani, nobody said there's any connection with privatization and protectionism. So that is a straw cutting as some. What's the phrase?
Straw man.
Secondly, privatization. You mean to say for the last 3 years, the government has been having a target of over 2 lakh.
One second. If you didn't say that, then why are you objecting? I don't understand.
No, because there's no point. I'm just going to clarify.
Then let me finish what my points are.
I'm just asking you on privatization. Last year, over 2 lakh crores was targeted without any proper plan. Without a plan.
I heard that from Omkar. Okay? Let me finish my point.
Okay, come
on. Sitting quietly for 20 minutes. Okay? Listening to politics.
So,
okay. Go ahead, Mr. Go ahead, Dr. Virmani.
There's no point calling me if you don't let me speak.
No, go ahead, sir.
Yeah, so privatization framework. Anybody who says this is something which is nothing, this will require a change in the Nationalization Act, which was implemented in 1970. It's 50 years. So anybody who says this is a non-policy, I don't understand what they are saying. There must be something, that I'm getting old and I don't understand. This is a major change in policy. It is what we used to call big bang reforms. I was involved in the 97 tax reforms. I put up a file which led to that reform, and we called it big bang reform. So this is big bang reform, the privatization policy. Now, about actual implementation, that is absolutely correct. I am not disputing that the number which is 1.7 is less than 2. but there's never been such an explicit commitment. And I'd much rather have a policy, and it is a change. Anybody who says that this is not a fundamental change in policy, I cannot agree with. Okay. Now, and finally, on some of the other issues, the GDP and revenue. Yes. Now, there's something called an automatic stabilizer. I dealt with the global financial crisis in 2009. I was CA. Okay. When you have a sharp fall, when you close down 40% of the economy, revenues shut down. When you lift that lockdown, they will go up. So this is not, it's wrong. We have 7 papers in 7 months of last year. This is not something surprising. I've been saying it repeatedly for the last 9 months that this is a completely unusual situation. And anybody who insists on analyzing it like as if it is just normal fluctuations up and down is wrong.
Okay.
This has nothing to do with normal buoyancy.
Right.
It is a peculiar situation of the pandemic.
Okay. Fair enough. Let's also just go across to Neelkant Mishra with Credit Suisse and also member of the Prime Minister's Economic Advisory Council. Sorry to keep you waiting, Neelkant. Neelkant, if you'd like to, of course, feel free to share your thoughts on the budget, but also respond to what Dr. Amit Mitra was saying, that the fundamental flaw in his view with the budget was that the idea was to stimulate demand. That meant putting money in people's hands instead of these, complex loans and other fiscal measures. That was the crucial missing link in the budget.
Yeah, like Dr. Virmani, I kind of disagree with a lot of what was said. So, and not because, I'm advising or not advising the government. I think just factually incorrect statements have been made before me. So, on the specific question you asked, the expenditure to GDP ratio in FY21 and FY22 are the highest since 1988, right? So anyone saying that there is no demand stimulation needs to go and check their facts, right? So the expenditure to GDP ratio, which had been falling steadily, the government, very rightly so in many ways, was shrinking its presence in its footprint in the economy and letting the private sector do its bit. This year and next year, FY21 and 22, the expenditure to GDP ratio is the highest since 1988. Even from a federal perspective, I agree that the tax growth has to a large extent been on the non-shareable pool, but at the same time, the state governments have been allowed to have a higher fiscal deficit for another 2 years. And if you see the numbers, we talk on just budgeted numbers, and I think the budgeted numbers are actually quite conservative. I mean, I would say that if I was the government, I would have budgeted for higher tax revenues. But there are 3.3 lakh crores of surplus cash. As you know, the government's banker is the RBI. There is 3.3 lakh crores, 1.6% of GDP of cash, surplus cash, lying with the RBI. And if you do your fact finding, you realize that a large part of that is with the state government. The state governments can't park that cash that way. So what they do, without making it sound too technical, they buy Government of India T-bills. The T-bills issuance right now is very high level. I think the state governments are struggling to spend. As the tax revenues go up, a lot of the discussion on the fiscal, on growth, etc., is very backward looking. In fact, I would say that even the government this year, in fact, the best way to measure the accuracy or rather the measure of the forecast accuracy would be FY22 over FY20. Because FY21 was you can call it a gap year, right? Because there were one-off expenditures, food subsidy went to 4.2 trillion rupees, free grains were distributed. Fertilizer subsidy, to answer Dr. Swami's question, there was 48, so this was announced in the last Atmanirbhar package. 48,000 crores of fertilizer subsidy arrears were cleared, right? Which is why this year the fertilizer subsidy number is 1.33 trillion. And next year it goes back to the 79,000, 80,000 crore range. Because the subsidies that were arrears have been cleared this year, which is why that number drops next year. Now, those things have been a distortion in aggregate expenditure. So if you compare FY22 to FY20, the tax number growth is like 5% CAGR, 5% annualized, which is, I think, a very low number. In fact, the government's projection for nominal GDP this year is actually lower than the IMF's projection, right? And I think that those numbers in the IMF's number need to be revised up by at least 3%.
Right. These are good points, actually. Thank you for making these points. They're very clear, and it's important to hear them. Yeah. And we'll just come back to you. I just want to bring in Shekhar Gupta here. Shekhar, I want you, you're a man of numbers, I know, and you really have them on your fingertips, but just for a moment, the bigger picture. Is this government a bit like the old Congress government, which doesn't really believe in privatization, believes in protectionism, even though the two are not related? But is there a philosophy, is there an ideology which is not really pushing the free market?
Look, first of all, on a day when the government says that it's going to sell this many companies and also 2 PSU banks and IDBI and a general insurance company and list LIC, on a day like that, I cannot say that this government is against privatization. Maybe when we review this a year from now, or maybe even 6 months from now, we could say, okay, they did not keep their promise, they flattered to deceive. That is a possibility. But the promise is made today, and I think you pointed this out in your morning discussion. You'll be surprised to know that I watch your discussions, even when I'm not there, particularly when I'm not there. You said that it's the first time that a government has used the term privatization. Now, I'll tell you a little bit about this. When Vajpayee started it, he called it disinvestment. Right? Arun Shourie was disinvestment minister. Before Vajpayee, Pakistan had started this process under Nawaz Sharif in his first government. He set up a national privatization commission. And he would always ask me, why is your government not saying privatization ministry? Why is your government saying disinvestment ministry? Then when Narendra Modi's government came, it became DIPAM, which was even more of a euphemism, which meant nothing. Now, no government reforms like Thatcher or Reagan these days, because they fundamentally believe in that stuff. They do it because they have to. So this government now, right now, is under pressure. They had 7 successive quarters of economic decline, growth decline, and now they've had negative growth for 4 quarters. So they are really in, this is a first class crisis. So in this one, if the government says that they are going to sell, BPCL has been on the line for some time. Frankly, even if BPCL alone sells, almost half of this money will be recovered. So I would not take a negative view on this just like that. Having said that, this government is protectionist. You see in today's tariff changes also, tariff increases, the government is protectionist, but protectionism is not about the public sector, protectionism is for the private sector. So in fact, you can turn around and say crony capitalism, because this government is raising tariffs to protect the private sector, not public sector. Public sector is hardly competitive in those areas. So that they are doing, I would say that this government's ideology, yes, it is not a free market ideology, but it's more closer to state capitalism.
Something we've been saying for the last maybe 3 decades. Socialism for the rich, capitalism for the poor.
Well, I don't think that's quite correct in this case, but we may still be saying it 1 year from now.
Okay.
Right.
Also bringing in Dr. Ila Patnaik. Dr. Patnaik, your thoughts on the budget, and what is the story of this budget really that you are picking up?
Okay, I think that the most important and the key message that comes out of the budget is from what is not there. So what wasn't there was populist schemes, a large number of small schemes, each catering to one sector or the other. There was no announcement for building a statue or anything with ideological or political salience. It was more about, okay, we want growth, capital investment, infrastructure spending, infrastructure investment. And that was part of the reason. The fact that all these things were not there was part of the reason, I think, that the message that comes out of the budget is that it is pro-market and pro-growth. Even if, I've been listening to all these questions about implementation questions about whether things will actually get done on time or not, or whether the numbers are right or not. But I think we should focus on the fact that this time the key message was different from the key message that came out of budgets in maybe the last 15 years or so. So that plus, some of the things that Shekhar has been talking about privatizing to, saying that we are going to privatize to public sector banks, using the words privatization, as Prannoy discussed this morning, is, something we haven't heard for a very long time. And I think it was also critical that she said that other than in the 4 strategic sectors, in all other sectors, public sector enterprises will be privatized. So the message you get is that it is in favor of privatization. You also get the message that this is not a government that is going to do populist things at this time, when it would have been very easy to do populist things. COVID time, job losses, so many sectors hurting. It would be very easy to say that, our deficit is going to be 9.5 again. Budget estimates are going to be another 9.5% of GDP, and that we are now going to do demand boosting, which means transferring money into people's accounts, to either Jan Dhan accounts or to companies. It also did not do any of the anti-rich tax increases that we've seen in the last few years, and which I think a lot of people were scared of, that there could be a COVID cess, there could be a tax on the rich, further taxes, just redistribution as against growth. So at least for me, that message was what came out of the budget. Of course, there is protectionism, as as Shekhar was just discussing, but I think she also tried to not do the anti-globalization message. And the big thing, that the government has been stuck on for a very long time, this FDI cap in insurance had almost become like something that is a test of the government, whether it's reformist or open to the world or not. And that was a signal where it was raised from 49 to 74, also to perhaps balance out the effect of the increasing protectionism one saw in Atmanirbhar Bharat and with the increase in custom duties that one is seeing. So, really, my takeaway was that's why the markets responded positively, and giving this message of pro-market, pro-growth, not public sector enterprises. The recapitalization amount to banks has been limited to 20,000 crores. So let's see what happens during the year. But even beyond the implementation, I think the messaging was very, very important.
Right. Very interesting. In fact, it's interesting that you mentioned that point about the insurance, because normally that would have reacted, they would have seen some kind of reaction in Parliament that you're going from 49 to over 70%. But it just passed quietly, barely anyone took note of it, though it was a big step. We also have Prannoy Pramod Bhasin, Chairman CLIX Capital and founder of Genpact, which is the business process outsourcing BPO firm. So good to have you, Pramod Bhasin. Just to ask you, Pramod Bhasin, on the point about jobs, though, because as much as the budget was meant to be about raising demand, the other question was to address jobs. We've seen huge job losses during the pandemic. Did the budget do anything to address that? Firstly, from your point of view, is it still quite bad in terms of unemployment, and did the budget really do enough to create jobs or to stimulate employment?
I think that's the important question for me, is what did it do for jobs, and not in the medium term, but in the short term. So, the budget has been very good, I think, and it's quite surprising. I totally agree with what Ela was saying. It's quite surprising, their stance on public investment, disinvestment, or privatization, whatever you wish to call it, their stance in terms of insurance. They've opened up a lot of things that you would have thought this government may not want to do. But on the jobs front, and particularly in terms of supporting MSMEs, there is no direct way in which they have shown that they will go out and help these people. You know, the retail sector, the restaurant sector, hospitality sector is on its knees. Construction is still on its knees. And in those areas where you would have the opportunity to help them directly and create more jobs, I haven't seen anything. Having said that, I think it's actually very difficult for the government to find ways to directly help these small businesses in the short term. We have no mechanism. You know, there's no point the RBI giving money to the banks because the banks don't lend to them. They can give it to the NBFCs in turn. Some of them are lent to these smaller companies. So the broad question that we unfortunately are left with is, how do we get these small businesses back up and running very quickly, because jobs are desperate? The last point I'll just make, though, which gives me hope, is I think India is going to have an astonishingly high trajectory of growth. We're going to, coming out of COVID, I think you're going to see an amazing amount of expenditure, consumption. You know, I was at the airport this morning going to Chandigarh. It took me half an hour to get through security queues because the lines were so long. It's as if COVID doesn't exist. So people are going to get back into business. They are going to spend money. And I'm really hoping that all of that will trigger growth, which in turn will allow all these migrant workers who have gone away to come back. Construction. I wish a lot more could have been done in construction, not just in affordable housing, but in broad construction, because those are the people that employ millions of these jobs and provide that kind of sustenance. But I didn't see some of that. So the jobs question, sorry for this very long answer, is left unanswered in many ways.
Very, very balanced and very, very interesting. Let me just ask now, Yamini Iyer, again, a couple of data points that Arvind Subramaniam has written about in his paper, and it's about the new form of hardware welfareism, where free LPG gas cylinders, and you know, it really has been a huge success. And if you look at the data on that, we can just show the graphic, that along with other forms like, here we are, new welfareism, you can see that there's been an increase in, you know, toilets, LPG, housing, as well as electricity. So, you know, these things, and including, you know, women using bank accounts. That's on the one side, and this has really been successful. But on the other side, and I think this has been perhaps fortunate, it wasn't really in focus earlier, but if we move on to the next graphic, about how has all this changed people's lives and, say, children. And it's extremely worrying. Healthcare, child healthcare has had a terrible blow. And if you look at each of the graphic, it was going down, the trend that child stunting was going down, anemia was going down, everything was going down. Acute respiratory illness was going down. They're all either going up or that trend of going down is over. This is what matters to people on the ground, that, you know, India should be way better at all these numbers. So Yamini, I think the point is healthcare and putting money in people's hands could change all this.
Absolutely.
Or you don't agree?
Absolutely. Ultimately, the objective of increased welfare spending should always be measured by its outcome, not by its output. And that's at the heart of what makes for good expenditure management. New welfareism, as I've written about in a paper with Nilanjan Sirkar, has been very, very politically effective. It has gained political dividends because it ensures attribution to the political power at the center. But there are questions about how effective this is at its ability to deliver on outcomes. And here I think this is very important about this budget. There is from March 25th onwards, the migrant crisis that became emblematic of India's COVID response and the impact of the lockdown was a very deep reminder of two really important things. Number one, as the World Bank has told us, despite a significant increase in lifting out of poverty consequent to the good growth years, 50% of India still remains what they define as vulnerable, i.e. a single income shock can push you back into poverty, which is why India needs to have strong social protection that actually is growth enabling and will enable the bulk of India's population to move from being vulnerable into relatively better off. And the fact that this was only mentioned in passing in the budget speech, the One Nation, One Ration card was discussed, but no real debate, discussion, or budget allocations for improved social protection, increased social protection is a real scar, I think, on this budget. Second related point, Neelkant rightly mentioned that expenditure as a percentage of GDP is in fact amongst highest since 1988. But it's also important to remember that GDP contracted quite significantly, and the expenditure demands on the budget for this year were very, very different to expenditure demands for budgets in any other year. So we need to look at FY21 within the specific context of what FY21 required. What we do see here is the increase in expenditure is largely on account of food subsidy and Manrega, which is as well as fertilizer subsidy. So that was part of the sort of relief component of the Atmanirbhar package. And an interesting only 4% increase in the expenditures from the Ministry of Health and Family Welfare. We see this continuing. There is a very important announcement in the budget this year of the launch of a new program, the Prime Minister's Swasthya Atmanirbhar Swasth Bima. Sorry, I forget the acronym. There's no clear allocation for it, but what's really important there is that it lays out a sort of a budget allocation over 6 years, relatively low than is needed, but nonetheless, and some of the direction in which it is headed, focus on primary healthcare, focus on public health in particular, district laboratories, etc., are certainly steps in the right direction. But without increased allocations in health, we are not going to solve the problem that you have mentioned. And it is important to also recognize, just a last point on the issue of federalism, the impact of COVID on state budgets is really significant. What the central government has done is to increase the borrowing limit, but essentially leave the states to borrow from the market, while at the same time tax devolution to states has dropped. I think that the commitment to a 40% vertical devolution that the budget has made as per the recommendations of the 15th Finance Commission is important. But if we look at what happened in the 14th Finance Commission period, the central government never lived up to that full commitment because it imposed cesses and surcharges.
Right.
It's very important to ensure that the commitment to fiscal devolution is actually met in the period of the 15th Finance Commission, and we should watch that closely.
Fair points. As we start to wind down, Shekhar Gupta, just to move away and just step back a bit and try to look at the story of this budget, because this government, all governments, but this government particularly, is very, very obsessed with the headlines. What is the big headline or headlines, do you think, that this budget has generated? The chief economic advisor said tomorrow, this is the day before he's presenting the economic survey, on budget day you will get both Panth and Pujara. Have we got more Panth or more Pujara?
Well, I think I'll leave cricket aside for a moment. I'll bring in Gordon Gekko. Remember Michael Douglas from Wall Street?
Yes.
And I will just tweak Gordon Gekko's line. In fact, in an article I've written, I've taken the whole quote, but I will not inflict the whole quote on you. But this is a budget. If you ask me, my headline, Modi government is now saying growth is good, because they are putting all their eggs in the growth basket. Because if growth doesn't take place, their revenues will not come in, then nothing will work. They will completely fail. So this is a big punt, as in P-U-N-T, not punt as in Rishabh. This is a big punt on growth. And I think it is also, politically, it is Narendra Modi's first BJP budget, because his 6 budgets so far were Congress budgets. Congress plus, Congress plus plus, Congress plus plus plus, and so on. This is the first BJP budget. This is a hard turn to the right.
Okay.
Very good.
Interesting. Just quick comments on that from everybody. Neelkant? Yes.
Yeah, so the government, I think, is very cognizant of the fact that it has limited capability, right? So, running an organization with, even if you exclude railways and post and all that, there are 300, 400,000 people. Getting them to do the right thing, and especially if you have to spend on things which you don't directly control, it becomes very challenging. So I think the government has been very careful on what it can spend without leakage and where it can actually control the outcomes, and recognizing that it has limitations in how much it can spend prudently. So I agree with the fact that, perhaps more money could have been spent, but then spending it, knowing what the outcomes can be, and without leakage is actually much harder than it seems, which is why I think the government has laid out a fiscal roadmap for 5 years, where it gets enough fiscal space. Now, interestingly, it realizes that if it can't spend, it should trigger animal instincts of the wealthy and the industrialists in terms of boosting aggregate demand. And I think many of the decisions, I think Ila rightly said, it is equally important what the government did not do. And I think by not doing those things, they have created a very positive vibe as the economy rebounds very sharply from the pandemic. And I think the spending by companies and individuals and households is likely to give a bigger boost than if the government had actually taxed them more and tried to squeeze in through pipes which don't exist.
Okay.
Right. I really was taken up by what Pramod Bhasin said about how, and I totally agree that people are going to now, go a little wild, spend, travel, and you can expect quite a good bounce back. But still, Pramod Bhasin, there is this question of the poorest. And, you mentioned even the migrants who need to get back, and just generally the poorest in our society. Is there room, like what other societies, other developing countries are, of actually a greater welfare state where the government actually puts cash in the hands of the poorest to help them through this tough time?
Prannoy, I really feel they should have done that. I know many more distinguished economists would feel that that may be bad for the fiscal deficit, etc. But there's no way to help these people except to get cash to them. It's going to take too long to trickle through the banking channels, through the lending channels. MSMEs are flat on their back. Retail, restaurant, lots of places could have done with a tax break just directed at them to say, here it is, or directed in a way which says, if you employ X number of people more, we'll give you Y amount of money, which you can spend on payroll, or provide a helping hand with payroll, as Germany and many other countries did. So I felt that that was missing, although this was a terrific growth-oriented budget. I agree with Shekhar, it's a big punt, but I'm not sure how big a punt it is, because honestly, India is going to be on a massive growth trajectory, and so is the world, by the way, although our growth rates will probably be higher than anybody. It'll be somewhat fake because, frankly, our growth rates were down so far. It'll look exuberant when it probably, on balance, we will not even get back to where we were 2 years ago. But it's still going to make people feel very good, and I think that's a very important element of what the future will look like. Okay. I'm certainly seeing it in our industry and banking and other places. You're going to see people willing to go out, borrow. We're already seeing business pretty much back to 80 to 90%. And that's the most surprising fact that I've been looking at over the last few months.
Right.
So that's last one. I wish they had done more on ease of doing business, because that's still a bad news story.
Yes. Okay.
Onkar, some last words from you. We are running out of time. Just quickly, we'll run through everybody. Last words from you, Onkar.
Okay. Thank you, Prannoy. A very simple point. This budget is way better than the previous budget, and that is saying actually quite a lot. No, the previous budget was very bad. This budget is actually pretty growth-oriented, and by most accounts, people will have not that much negative to say. Perhaps more things could be done, but it has done quite a lot, and so kudos for that. My second point, and my more important point, is yes, there will be slippages. I do not believe that they will get the amount of tax revenue that they are expecting. You may not even get the disinvestment unless you get some real big ticket items. You may fall short on a few other items. And at the end, next year, your fiscal deficit, instead of being 6.8% of GDP, may go up to 7.6, 7.7, maybe even 7.8% of GDP. But you know what? When you come out of a drop of 23%, then 7.5%, come out in the year and expect to go at 11% nominal and 14.5%, 11% real growth and 14.5% nominal growth, even if you slip the fiscal deficit by 1% of GDP, who cares? The only people who you think care are the rating agencies, and my answer to them is buggered, screw them, forget it. Hell with them.
Okay.
On a replay, we will beep that.
Ila Patnaik, if you were an editor and wearing your imaginary editor hat, what would be your headline from the budget?
That the government seems to be betting on crowding in for job growth. So normally, we've become so used to governments depending on Manrega, on saying I will do so much skill development and create so many jobs, that we've forgotten that the way to jobs in a market economy is to have more investment. And if the public sector, government, along with private funding, and manages to get investment in infrastructure, so if it is jobs for construction jobs, then it is getting jobs directly in the construction sector. But otherwise, if it is building infrastructure, then that crowds in private investment, and that is the way forward in jobs. And I think we've forgotten that for so many years, that today when we see that approach, and that's what seems to be the approach and the bet and the punt in this budget, that's what will take off, because the biggest problem, as you said, is today jobs. But for that, I think a completely radically different approach has been taken compared to what we've seen in the last 4, 5, 6, maybe about 15 years. Right. Not after the Vajpayee years and the privatization and growth pattern, growth framework of those years, have we seen this happen?
Okay.
So I think my headline would be betting on crowding in.
Crowding in. Interesting. Anyway, we're completely out of time, but thank you all so much for joining us. It's been a fantastic panel. Thank you so much for watching. We'll have to leave it there.
Thank you all. Thank you very, very much.
Thank you very much.
Thank you.
Good night.